Hello, Paul. Welcome to the
Hello,
podcast,
Max.
man.
Very well being here. Very fun so far.
How's it going?
It's going great. So, out of the two topics we were discussing, so either ladies or money, we chose money for now.
Yeah, next time, ladies.
We both are interested in investments, and we were both talking about the stock market,
Yeah.
that it's currently going a bit down, as I understand, due to the crazy fires in California.
Yeah. Since Trump is the president, I'm pretty sure it's gonna be okay.
Well, there are other factors other than politics, such as the yield curve. It used to be inverted, and now it's changing into, let's just say, a positive version. If you just go to the bond market on CNBC, you can check that out. That's one of the main factors. The only time I heard that it didn't work was in 1962. I think that was the year. So basically, the yield curve is basically the 1 month bond, then 3 month bond, and 1 year bond, then the 5, 10, and 30, and they all line up and they make various charts.
Okay.
When
Like
it's
patterns.
yeah, when it's in a shape where it goes down, it's called inverted yield curve, and the flat one is when it's simply supposed to be in a neutral type of market where it doesn't go anywhere up or down. And the bull curve is when it's supposed to go up. I think it's called the bull curve.
Okay.
So that is a very positive indicator. A flat curve, and it's turning into the bull side.
Okay.
It's very tricky. For now, it's flat.
Okay.
Which is mostly the market, because you've seen it go up, we've seen it go down, we've seen it just go flat completely. Right now, the market is on a decision.
Okay.
Am I going to go up or down, up or down, up or down? A lot of people are making a joke and giving it a new name. They're calling it the kangaroo market.
We're talking about bonds here, right?
Yeah, and the indicator that is very famous is, as I was saying, the bond. The curves, the yield curves and bull curves.
Okay.
That's going in cycles over and over. I gotta fix that
Okay.
when it comes to podcasting. Out of the market right now, I've seen how Tether has bought over 30% of Rumble, and that caused them to fly up 40%. And it went from
Rumble stock, you mean, right?
Rumble stock went from $7 to $17 in like 3 days.
No way.
That's over 100%. Now it fell to $11. But yesterday there was some kind of a deal between the El Salvador and Rumble, and it went back up in 8%.
Okay.
So it's a huge type of, how to say it, a super volatile stock at the moment.
It
If you're
is.
selling options, like take a look at Rumble, it's very, very volatile.
Yeah, like a GameStop back in the day.
Kind of. That's what I was hoping for, but GameStop went all the way like 300% in like a few days due to the super short squeeze.
But what do you think about the Rumble itself as a service?
As a service, it's pretty good, but I was checking out its balance sheet. It's not the best type I like, because its equity is going a bit down. I should mention that I don't have any type of license to give any recommendations.
Not financial advice, guys.
Yeah, that's very important right now. I just read all this stuff in the Buffettology books and various channels on YouTube that look very professional. I remember this guy called Jeremy, and he runs the financial education.
Jeremy?
Yeah.
Not the Jeremy Fragrance, though.
I have no idea what his last name is.
No, I'm kidding.
I just remember that he calls himself Jeremy. If I'm mistaken, that's going to be very embarrassing. But his channel is called The Financial Education. And he was giving a huge advice about buying Tesla approximately 5, 6, 7 years ago.
Okay.
And if he bought the stock back then, the guy is teaching us not from verbal advice, but from his actual results.
Okay.
I think the dude is very smart.
Okay.
And there were kind of other stocks he recommended, but I don't remember at the moment what else was besides Tesla. Tesla is the most popular one right now.
You know that they say that Palantir is the next Tesla stock.
Oh yeah,
Have you
I
heard
about
about
that one.
Palantir?
Yes, just yesterday I heard about
Really?
it. I think its symbol is PL
PLTR.
TR. There you go.
Yeah, the ticker PLTR.
Yeah, I remember checking out their balance sheet, and it's actually pretty good. But I think at the moment it's slightly overvalued. If you're into value stocks, Palantir right now is not the best moment to buy. But if it goes down, then yeah, you should buy it. Stocks, if you're using the Buffett method, stocks are to be bought from value and when they are undervalued. Because most people panic when a stock goes down and they sell it. And then when it goes up, they buy it because, hey,
It's a hype.
yeah, that's not how it works.
Yes, you buy low, sell high.
You don't buy real estate for, let's say, 1 million and then sell it for 500,000. Yes, you're not really going to make money like that.
Yeah.
Investors such as Buffett and, let's say, Benjamin Graham, who was his mentors, they buy the stock when it falls down to the lowest, when the company is at a wreck, when it's completely messed up. They are happy when their stock goes down because then they can buy more. That's the whole concept of investing. When you are trading on a daily basis, yeah, then I can understand, follow the trend and stuff like that. But when you're trading, the person is almost obliged to know how to lose money sometimes. That's the whole concept of trading.
Yeah. In trading, I'm not a believer in trading, in day trading. I believe that only a fraction of people can actually do this profitable in a long run.
Yeah.
But the whole concept of trading, winning just more than 50%. Either you're winning just 55%, 52%, 60%, and the rest you're losing. That's basically it. On this fraction, like on this little difference, this is where you're making money.
That's literally how casinos work.
Exactly.
The spinner they have with the red and black squares, I don't remember what it's called. I'm sorry. But I'm pretty sure you all know what I'm talking about.
Black and red ones?
Yeah. They also have a green one, which gives the house 51%, while the players or the gamblers, they have approximately 49%. And that's literally how casinos make money. With the 51%, they make that little 1% all the time. They lose sometimes, but that 1% gives them a lot of money.
That's exactly how trading works, basically. And statistically speaking, 90% of traders lose everything.
Yes, but don't make the mistake of thinking that trading is bad. Some people
people can do it.
Yes.
I just don't know how to do it. And
neither do I.
It doesn't mean, if I don't know how to do it, doesn't mean that you're not going to do it successfully. I mean,
I think his name is Kyle McDonald. I'm pretty sure most of you heard this story, but just in case you didn't, I'm going to share. So on some kind of a website, he traded a paperclip initially for a pen.
okay.
Then he traded the pen for a door handle.
Okay.
And then the cycle goes on where he traded for bigger and bigger and bigger items. Eventually, it led to the part where he traded one of his items for a car, and then he traded the car for a house.
No way.
So take a look at the whole image, the whole brilliance of this trick, that you started with a red paperclip. So if you don't tell the whole context, he traded a paperclip for a house. That's how it works. So I was talking about how low debt is needed. And some people might say, how low? Well, according to the Buffettology books, if you divide debt by net income, the number should be below 5.
Okay.
And one of the alternatives, I believe, is if the cash is more than debt. So from total assets, you simply check the cash, and from total liabilities, you check the debt.
Okay, and this is how you see if the company is either overvalued or undervalued, basically.
That's how you see if the company is stable, financially stable.
Okay.
When it comes to see valued and undervalued, that's where you get the PE ratio and the price per book value ratio. That's the second one. PE ratio is when you have, oh shoot, I forgot what the E stands for, but I perfectly know how it works. PE ratio should be 15 or under, and the price per book value ratio should be 1.5 or, once again, lower. That's how you see when it's undervalued. If it's over that, then it's currently overvalued, which is most of the stocks today called growth stocks.
That's pretty cool. Yeah, and I mean, you could see this on the chart of the S&P 500 as well. It's very vertical right now, like very vertical. I'm pretty sure there's going to be at some point, not now, maybe like in a couple of years, maybe in 10 years, but there has to be some kind of setback because the chart looks very vertical, like.
Well, I think it always looks like that due to the basics of inflations, the amount of money they're printing.
Yeah.
They generally have a correction every year, and the correction is when the market goes down under 10%. And the bear market, I believe, is every 5 years. However, we received 2 bear markets.
With stocks, honestly, I'm not that experienced with like the cycle of stocks, but with crypto, yes, I would say like every four years we got the bear market.
I think we are currently in a situation of being close to a correction because of the once again these crazy
Timelines?
fires.
Oh, fires!
I just remember seeing that it went down 1.5% during Friday.
It's not that bad.
Yeah, it's not that bad, but if it goes down like that for a whole week, in total, that's going to be 10% over simply a week.
Yeah.
Depends on how they solve that or how they're planning to solve that, because if I remember correctly, California is the richest state in USA.
Is it?
I think so.
I'm not sure. Might be.
It's
very expensive.
Texas is slowly becoming the richest because all the super tech giants are going there. But before that, I'm certain California at least was the richest. At least it must retain the second place.
Yeah, absolutely.
And when you have the richest one literally burning, it's got to drag the market down at least a little.
Well, hopefully the bear market is not going to be for too long, and it's going to be actually exciting to see what's going to happen next.
I just remember it was very funny. In 2016, certain billionaires shorted the market by over $1 billion. And then the market went the opposite way. And that caused $1 billion would cause the short squeeze over the entire market. So these people who shorted the market, they kind of helped us.
There you go.
For those of us who invested positively
I'll send them
into the situation. I just got to say one thing.
Sure.
The market, the companies, they are hardwired to go up. So shorting is not something I personally believe in. Some people are good at it. But again, these companies, markets, prices, they are all hardwired to go up in the long term. So that just gives positive news that we're planning to go up.
Yeah. All right, man. Thank you for coming.